I think a lot of corporations are cashing in on our new personal favor culture and PR culture, saying basically, hey, we're on board with you. You had this great idea to get us to raise wages. We're doing that. We're investing in the United States. Please approve our big deals that we want to have. And think of us fondly when it actually turns out that most companies don't increase wages from their tax cuts.
So I note a hint of cynicism in your answer.
Listen, it's any little bit is good going to the folks who actually spend the money that drive this economy. The big problem with the GOP tax bill, in my view, is that it targets the wrong problem. The problem is not that the 0.1% don't have enough to invest in new companies. The problem is that the 99.9% don't have enough to spend on all these great products that our companies are producing. We need to get the money to them. Tax bill doesn't do that. But here, the justification for the tax bill is, oh, companies are going to use all the savings to give people raises. It's a nice story. There's no evidence for it, but these companies are now cashing in.
Now they got $1,000 more, I suppose, and that's nothing to just sort of sniff at, except that executives don't seem to have a problem getting higher compensation packages year after year, where the middle-class worker has been stagnant for a long time. And though raising the minimum wage of your workforce is good, it's unclear what's going to happen for the bulk of workers outside of these $1,000 bonuses. Are they going to see actual wage increases from what we've seen in the jobs numbers over the past couple of years, it feels like? Maybe not.
That is exactly right, and that is the problem. And the good news is there are positive signs. We have gone from a much lower minimum wage, lots of companies voluntarily raising wages. Apple did this, Starbucks is doing this. That is good. $15, you can actually start to consider possibly maybe living on it, and we're getting past this culture where at Walmart, for example, you've got $26 billion of operating cash flow, and yet almost 1 million of your employees are poor, even working full-time. Just doesn't make sense. So that's where we need to actually drive the economy, and hopefully this drives more of it.
And the bigger context of it here, too, is, of course, we do have a somewhat tighter labor market. You do have these companies that are having a hard time necessarily attracting and retaining. So it all kind of fits in what they're going to have to do otherwise, perhaps. But also, I think it also shows, I was saying last night when these announcements were coming out, people underestimate how much buybacks have been villainized. And on cue, Chuck Schumer's office put out that list of all the companies that have announced buybacks since the Senate passed its version of the bill. I mean, it's amazing how that PR gesture, even if it is just that, is trying to counteract
Although the administration tried to get in front of that by arguing that all buyback dividend, no matter what it is going to filter into the economy.
Somehow.
What's interesting is others argue that the Phillips curve is going to start to kick in.
That's right.
We're going to get wage increases, and they will be attributed to the bill, fairly or not, right? It's just good timing.
But it would be great timing. And look, if we get the wage increases, that's great. And if the bill helps, that's also great.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.